All right, looks like the music is working. Let's just do a quick audio test before we get started. We should start in about 2 minutes or so. Just let me know if you can hear me okay or if we need to adjust the mics. Testing 1, 2, 3. Testing, testing. Okay, voice audio is A-OK, great. Okay, so folks, we'll get started in about a minute. All right, welcome to this week's Stock Analysis Fridays. Great to have everybody here. Today is April 14th, 2023. Okay, halfway through the month of April already. All right, a couple things. Go ahead. If you're here, of course, for me to look up stocks. That's what we do. We give you a second opinion, but we also, too, usually uncover a few really good ones that you may not be aware of. So we're going to have a lot of fun today. So go ahead and start typing in your stock symbols or ETF symbols and type them in caps, okay? So make sure you type those in caps in the comments area. And you can go ahead and do that now. I got a few administrational items I'm going to cover, and then I'll be ready to go to look at your stocks. And I've got a couple I'm going to show you as well today. All right, so we do this every 8 a.m. Pacific time here on YouTube, and then we broadcast to LinkedIn and also to Facebook. So wherever you're tuning in here, it's great to have you here. Now, we do record the session, and I think the recordings are pretty much on YouTube. So if you ever miss a session, go to our YouTube channel. Please subscribe there so you have access to these recordings. All right, so let me go through the administrational items. Welcome, everybody, today. All right, so first thing we want to do, of course, is talk about the risks involved in trading. So there are risks involved in trading. I think we kind of all know that by now. It is possible to lose some or all your money short-term or even long-term trading the markets as an investment situation. Be sure that you always trade with money you can afford to risk. You know, in trading, we deal in a realm of probabilities, not certainties. So nothing is guaranteed. So you have to know how to do risk control. Risk control is very, very important in trading. You know, the old saying, keep your losing trades small and let your winners run, is so very, very true. And you have to have a structured approach in order to do that. So it all is a combination of stop loss settings and when to take profits. And that's what all our education is about. So in addition to that, please check with your financial advisor or money manager, whoever handles your money, to make sure any of the stock suggestions we talk about here are suitable for you. We don't know your personal situation. They do. A lot of variables go into whether a stock trade is suitable for you. So definitely check with them. And then finally, if you need help with risk control, this is where we are experts. We have a variety of different tools available in terms of software, but I've also written some really good books on money management and risk control. I came out with one last year where basically I took some of the most important elements I think you need to have as a short-term trader or even an investor and put it into a concise book so you could implement right away a good, solid risk control program. Now, I have a much more detailed, comprehensive book, which is that book on the far left called The Trader's Money Management System, if you want a deeper dive. But my new book, Money Management for Traders, second from the right in the green border, will do the job for you. So definitely check that out. It's available at Amazon. I'll put all the links up for all these types of things in the recording, okay? So don't worry about that. All right, The Art of Trading is my second new book coming out. I came out with the previous one back in, 2008? So we're due for a second one. So Wiley contacted me and wanted me to do a new Art of Trading second edition. Very excited about this book. I'm working really hard, making it very comprehensive. There's a lot of new information in the new book. That's going to be excellent. We also have come out with quite a few software studies since the first book. So we've added those as well into the second book. You can pre-order that. And again, the link will be in the recording. Elliott Wave Techniques Simplified is all about the Elliott Wave Survival Guide for Traders. Is all about running your trading business like a professional hedge fund using today's technology in the markets. So those are available on our Amazon page. All right, now when we look at charts today, we're going to use our software tools. They're proprietary. If you're interested in getting them, we'll put a link in the recording too, or you can go to our website, of course, and purchase them. We have charting software, we have scanners, and we have risk control software. We cover the main bases and what you need in terms of structured trading tools. And that's why we call it the ultimate trading system. So definitely check that out. It's great stuff. The ART software, OWL, PTF, TLM, ERI are just a few of the software studies that we have. All right, finally, in order for us to promote our channel, and do all that kind of good stuff, we need you to like us. You need to subscribe, and you need to share with friends. The more people we get here, the better. Okay, so definitely, check us out and tell your friends about us. And let's get as many people as we can here, because the more people that bring a few stocks, the more opportunities we're going to be able to uncover. And so it's almost like a stock picking service. And then finally, I just want to thank everybody who is here or watching the recording. Thanks for tuning in. Please subscribe again to our channel. And also, too, we do this every Friday. So please definitely tune in. I know everybody's busy on Fridays, so we try to keep these to about an hour long. But we also like to go through all the stocks everybody has. So definitely tune in here. Okay, so let's get out of this area here and go into the charts. A couple things on the charts for those that are new here. I use something called multiple time frame analysis. And basically what we do is we look at 3 different charts of the same stock on different time frames using our software loaded on each chart. So on the far left-hand chart, this is a 60-minute chart. This gives us kind of a view of the short-term aspect of what we're looking at. Then in the center chart, I have a daily chart. We call this basically the intermediate term, and this is most typically used for position trading, meaning you make a trade, you hold it overnight, and you may be in that trade for maybe a couple weeks, couple months if it's super successful, but it's not a long-term trade. And then finally, our weekly chart on the far left is the longer-term aspect, and we do use this chart for longer-term trades or even investments. Okay, we like to make sure the technicals are going in the direction of the fundamentals on some certain investments we do, and we run that by the long-term chart. So that's how we have it all set up. These little triangles you see here are all part of the ART software. We have the OWL down here that measures momentum. We have the PTF here. This is a great little indicator. For example, when it's green like it is now, there's a 75% probability, because that's the accuracy rate on that we're going to get above the high in that green area. So it's really simple to use. You just find in a green one the highest high, and that's the likelihood of where prices are going to exceed. Vice versa, if it's red, that would be for the downside. And then we have the trend line master that automatically looks at the trend and tells us whether it's bullish or bearish. And then we have a fear and greed index called the ERI at the very bottom. So that's all our software tools, but they're loaded on each individual chart. And then finally at the top, this rainbow colored situation up here is our scanners. And our scanners work on a variety of different charting platforms. Also, too, we have our famous risk to reward calculator right here that I'm moving around. And before we take any trade, whether it's a day trade or a position trade, we run it by the risk to reward calculator to make sure we know the trade size we can take, so we know our risk percentage that we can lose on a particular trade. And also, too, we know the risk to reward on that trade. And then finally, at the end of session today, we usually take a look at some of the very short-term day trading time frames. and we have that keyed up for the major futures markets. We do like to day trade the futures markets. So there you have it. Okay, that's a software all in one package. All right, couple ones I want to take a look at. All right, first thing I'm going to actually bring up DKNG. All right, so this is one that looks like it may be coming off a bottom here. And our target is between $30.27 and $43.33. Now, let's take a look at what the software is saying. We've got a pyramid forming here. We had a few red ones down here. They're gone. They've been voided out when prices get above the top. So no more short trades. So now it's looking long. We've got green down here in the owl, and we've got green now coming back on the daily. And look, we got a PTF here and here. So this looks pretty good. I put my stop probably under this pyramid. If you want to be super, super safe, put it under here. Okay. So that could be two places you could put your stop and then run it by the trade size calculator. All right. Again, hopefully the audio is okay so you can hear me good. But that is one I wanted to share with everybody this morning. Now, I do want to take a look at a couple of the metals. And I'm going to start with gold because this is, one we recommended here in this room as well. Okay, quite a while ago. And look how well it's doing. All right, it is taken off. Now, here's where we kind of were looking at it. It had actually, it was actually first recommended back in here. We took profits here. Now we're back in, okay? So the pyramids have done an excellent job, and that's part of the ART system of getting us into this gold trade and actually getting us out before the recent move down. But when using fibs, okay, what we noticed is this was a high, this was a corrective low, and now it's going back in. Something very interesting is occurring though. All right, at first we thought this was a 3, 4, 5, but guess what? This is a wave 3 according to the owl because it's higher than this one. So this now is a 3, and what we're probably looking at is bearish divergence. We're probably getting ready now to go into a major 4, but I think we got some more highs to come. So I don't think that's coming yet. So we're still in one of the big moves up on the daily chart. On the weekly chart, this is a wave 5. All right, so that makes sense. We're kind of in a 3, 4, 5. So I think we're probably going to get to the upper target of the weekly chart before it's all over, which is above, around 240 on gold. So there's still a lot of room left on gold. Got to be careful on your stops because you will get a pullback on this, and you may want to take profits on the next pullback and then go back in after that's done. So gold looks really good. I hope you were able to get in early when we suggested that because that was outstanding. All right, we got to look at the cryptos today. And I'm just going to look at the ETFs. There's futures and there's all sorts of good cryptos you can get. Cryptos is another one, we recommended in the room, right? And so this one is doing just great. All right, moving up really excellently. If you got in when we told you in the $9 level, you've already basically doubled your money for the most part. So it's at 1660, got above 18. So you can't be, you got to be happy with that, right? But we don't think it's over. Okay, we think it's actually going around to 25 to 37. That is our intermediate area target zone. Now, if this is a major bottom in GBTC, don't be surprised if we go soaring past $60. No kidding. Okay, this has got a lot of potential. But if you're going to trade the daily chart, you'll never make it to 60 because you're going to be stopped out on the impulsive waves on the daily chart. So you got to keep your stop based on the weekly chart if you want to try to get those big numbers and look at this as a long-term trade. It's not going to get to 60 tomorrow. It's not going to get to 60 next month. It'll take a while. All right, so please realize that. If you're trading this short term, you got to have your stop right here on this pyramid, okay? So you want to keep it there. We're probably due for a little correction at some point, but this is still good. So I got to tell you, I'm going to write this down, GBTC, as a recommendation for a long. I would not take it right now as a short-term trade because it's due for a pullback, but on the next pullback, you can get in, and we'll talk about it then. All right, the other one on the crypto is blockchain, okay, RIOT. This is another one that has taken off, and we recommended this one as well. All right, so this is an excellent one. And if you go back and look at our previous recordings here on Stock Analysis Friday, you'll see where we talked about these stocks. All right, excellent one. Again, I'm looking for this thing to get above 80, about 85 probably over the next year or two or three. So I think it's on its way up. And again, if you're long-term trading, you just want to get in using the weekly chart, put your stop as low as you can, all right, on those two levels, and just leave it alone. If you're short-term trading, then you got to use the pyramids. You've got green here. Look at the owl saying we're in wave 3 now. So wave 3, you got a lot of momentum, all right? Put your stop here. If you trade just for a few days, then your stop is going to be here. But with a green PTF on all these time frames, don't get out. Stay in, okay? Just make sure your stop's not too close. All right, so that's another one. Okay, I've got to put that down. Still on the recommended list. All right, now we got to take a look at silver. This is the other one we recommend. All right, all these are going to do it great. Now, whether you think the market is going to sell off this year at the end of the year, we do, okay? But there is still another month or two, I think, of movement to the upside on the NASDAQ and the Dow before we start to experience a little difficulty, of course. But, you know, these what I'm showing from GBTC to RIOT to silver to gold, all of these are looking really good, even if the market sells off, because money will flow into the metals and these particular ETFs as well. So as you can see, wow, look at silver. Took off, okay? Again, long term, I think you're probably okay on this. I would say probably within the next, I'm going to take a guess here, you'll have a pullback to about 20. Great time to possibly get in again. If it goes up higher before it does that, then probably it'll be 22. It pulls back, but it's going to pull back. It's already starting, but the owls have to go red to verify the pullback. So I imagine we'll get some type of pullback in here. You can load the boat there and go long, okay? If you're taking this as a long-term trade, your stop's got to be way down at 18 here, okay? So it has to be below here, okay? And that's according to the pyramid over here. And then I would imagine we'll get to a fib extension of around 32, 34 over the course of the next 6 months to a year, okay? So I'm pretty happy with SLV, another excellent one. USO, and let me just take a look at a couple of these here, and then we'll go on here. USO, we have a target. USO is the ETF for oil. Sorry, gotta tell you that. So we have a target between 100 and 126, and if you look, you can see that target over here, right here. So we're kind of thinking on this. We had a 3, we had a 4, and by the way, when I talk about 3, 4s, and 5s. I guess I should tell you that is the Elliott wave I'm talking about. So if you're thinking, well, what is he talking about with numbers? Okay, that's it. Elliott wave assigns numbers. It's a great form of technical analysis. I've used it for over 30 years now. And it really is a great roadmap for the market. If you're interested in learning more, I've got a book on it. And I also got a great home study course on it. All right, so that's where we think it's going. It hit the target, okay? We tried to go in a little bit early here, got stopped out, but now back in, okay? So this looks really good. Again, you got to put your stop at the bottom, all right? If you're trading this little short-term blip, you're probably going to get a pullback here, okay? So I would make sure you keep your stop far enough away for a pullback at some point. So keep that in mind. All right, let me now see. I think those are the major ones I wanted to go over. So let's hit it. All right, let me go back. And okay, Jim wants to take a look at these SPDR, okay? The SPDR is basically the ETF for the S&P 500. And we'll load that bad boy. And we're kind of looking at a couple things here, okay? So short term, we don't think the move up is over. Now, I know a lot of people out there are expecting a big bear market, and so are we, all right? But timing is everything. And so in this particular situation, it's not there yet. It's still going up. And according to our indicators, it's going to go up quite a bit further because look, this PTF is showing there's a 75% probability of going higher than this. All right, don't you think that's kind of important to know? This is why if you're not using the right tools, you're not going to make it in this business. It's not about guessing. It's not about having an intuitive feel. You can have an intuitive feel based on your structure, on your studies, but you can't have one just throwing darts, okay? You have to have the right tools. And this is where so many people fail, all right? you gotta have structure in this business, and that's what the tools provide. So that's what it's saying. Short term, it's going up. Long term, look at this. Long term, it's going down big time. So am I bearish on the market? Are we in a long-term bear market? You betcha. But we're still in a bullish rally inside the bear market, and it doesn't appear to be over. Same thing with the NASDAQ. That's why we're recommending so many long stocks right now, because we still can take advantage of this bull run on short-term trades. Okay, so there you have it. But we are expecting a sell-off, but I don't think we're there yet. So hopefully that Jim kind of clarified things a little bit. On the weekly chart, we're in a bear market in a complex Elliott wave correction. If you're interested in following us on this, we predicted this for quite some time, and now it's, of course, unraveling. But if you're interested in a long-term forecast, you should be subscribed to our MORE service, Market Opportunity Report. Bingo, okay, or our Oracle. Either one of those will keep you in tune with the market. All right, so definitely keep that in mind. All right, Sergio, I covered silver already, so I think we're good. Frank's asking me, Ben, how do you use stops on options? Well, that's a great question. And I'll just quickly mention how I do it. And of course, there are many different ways to do it. You can create, Frank, a synthetic stop. If you use more than one or two options, okay, you can basically know what your loss is by the combination of those options in terms of the risk. And also, too, if you simply are going to buy calls and puts, just know what your risk amount that you want to risk is, and then don't buy any more than what you can afford to risk. So, for example, if you have a $50,000 account and you don't want to risk more than 2%, well, guess what? That's going to be $1,000. So don't buy more than $1,000 of a call or put, and you've automatically limited your risk, because that would be the same as if you got stopped out. If you want to use the trade size calculator, the risk to reward calculator, it will give you the trade size on the underlying and then just convert that to options, right? All right, so one contract of an option is 100 shares of the stock. So if the trade size calculator, the risk to reward calculator tells you to buy 500 shares, you buy 5 contracts. But then you have to get out when your stop is hit on the underlying asset, okay? So hopefully that will help you figure out how to do that. Options are great and they are fun. Al, good to have you here. All right, so now Al, 2 things about Al I want to tell everybody about. He's done a great job finding some stocks for our group. He's found some bottoms. Everybody's done a great job, but Al specifically has quite a few that he gets in early on. Al also has a lot of penny stocks. So let's see what Al's got in store for us now. You got to be careful with the penny stocks, okay? Not always the greatest thing. You can still lose a lot of money on penny stocks. All right, so this is not one, okay? Not bad. Al's looking probably for a wave 5 trade here. So it's not a breakout from a bottom. We've already had that. This is a 3. Thank you, Mr. Al, for showing us that. Wave 4 has got to be red, so you got that. And wave 5 appears to be coming back here now. So it looks pretty good. And Mr. Pyramid also has us going long here too. So again, in having structure, we're connecting a lot of dots. We have green here, we have green here, we have green here, we have green here, we have green here. Yellow here is okay. Yellow's neutral. All right, so that's where we're at right now. There's one more dot, 2 more dots we need to connect. Let's draw in the fib retracements and see if this bad boy has actually retraced what it needs to retrace on this recent downturn. And bingo, look. Now, we draw fibs a little differently, okay? We use the Elliott wave counts to draw the fibs. Basically, there we are, okay? Right there. Let's see, this could be a little bit lower. It's kind of almost a double bottom. Let's even be a little bit more abrupt and put it down here, and you still basically hit the target zone. So, okay, and it looks like you might have an ABC. So if you go long here, you want to put your stop at the bottom. Don't put it on the pyramid because you may get a pullback before it goes up. So you could put it at the pyramid. I guess that's beyond the point of inflection, so that's okay. So that's kind of where we're looking at. Let's draw a extension here. And I think that's probably the best place to put it. So we're looking at 32 to 40 on the target zone. I'm going to put this down as a recommended stock. Okay. VRNA is a go. Okay, nice. All right, I would put your stop at the pyramid here at this point. Okay, so that should be okay. So that stop on the pyramid, let me look at my thing, is at 1919, so 19.18 is where you want to put your stop. Now, when it reaches the next high, okay, then that's going to be the end of this fifth wave, if you like the Elliott wave, 3, 4, 5. And that's probably going to be the end of wave 3. Okay, so this should go up one more time, 3. So these are the 5 waves inside the impulsive wave there, okay? So this is 3, 4, 5. That's how it works. For those of you, again, that want to learn about Elliott wave, check us out, okay? I got a whole course on that. All right, so VRNA is a winner. Big winner. Nice job. Woohoo. Okay, TELL. Let's take a look at that bad boy and see what's cooking on there. All right, so this is a bottom fisher that seems to be breaking out. Couple things here, all right? Now, it is breaking out. You can see it on the lower time frames. It did, in other words, this was a great short trade. And the way the pyramids work is you enter on the bottom points of the triangle, and they are taking account into momentum and price patterns, and they try to find the best places to put your stops. And so your stop would have been right here on top of this pyramid. So you would have gotten stopped out right there, but you also got a pyramid to go long. So it's almost a stop in reverse. So now you'd be long, and you also want to make sure you do not go long until you have a green out. Yellow's okay, and you got the green over here. So the green over here is basically saying this is going to return and go here. This is an excellent time to go long. Now, a couple things. You still got an active pyramid here. You still got red here. So whatever the trade size calculates out to be, take half, because you don't have confirmation on this time frame yet. But if you want to get in early, you probably never will have confirmation on the long-term charts at first. But go in anyway if you think it's good. Like I would go into this, all right, and go in with half a trade size. So I'm liking this one too, all right? TELL. All right, good job on that one. All right, FCX, let's take a look at that bad boy. See, you come here, you already got 1, 2, 3, 4, 5 stocks that you can look at for next week, or even for the after we end the session today. You can go take these. All right, another good one. Let's see. Let's open up. Let's take a look at the wave count here. So that was enough for a 4. So we got, looks like we got a 3. Oh, we might have had a 3, 4, 5. Ooh, okay. We got to be a little careful on this. So 3, 4, 5. So now, not so sure, Al, about this one. Let's just see what we got cooking here. I'm looking to see if we've got enough of a correction in ABC. We could be starting up again. Kind of a messy daily. All right, here's my problem with this one. All right, so this is showing a 3 here because it has the most momentum. You had the 4 correction that had red, and then you had 5, and then you had 5 higher than 3, about in the target zone, bearish divergence. So technically that ended the 5th wave up. So if you were thinking this is 3, not so sure, okay? That doesn't look like it to me. And if that's the case, then this would be a 4 and you'd be going long here. So I don't think that's the count, but it is possible that we had a 5-wave count up here, and then we had an ABC correction, and now we're on a new 5-wave count up here. That's possible, all right? Messy weekly, messy chart on the daily. So I'm going to say no on this, and we've had a big run up already on the 60, so it's due for a pullback. So I guess I'm going to keep this one off the buy list. Okay, I think the others are better. Let's go to WFRD. You know, it's all about connecting the dots and clarity. If I can't see the clarity I kind of want to see, then I just move on. All right, so here we've got one definitely moving up in a wave 3. Wave 3 seems like it's completed. I don't think we've had, let me just make sure. Yeah, that's the highest Al, so that's wave 3. We're in a wave 3 here. So I think what I have, a dot we need to connect here is, did we get enough of a correction? And yes, we did. Okay, so I guess we've gotten the 3, 4, and we've got 5, and 5 here will end wave 3. So 5, well, let me just erase that. This is the 5th wave of the 3rd coming up here. So this will be wave 3 over here. There's your 3, probably your 4, 5. All right, there's one dot that I don't like here, okay? I don't like the fact that in this structure here, there's no real ABC correction. See that? So this could be an A, B, and go back into the target zone before it goes. That's the only thing I don't like about that one. So what do? Well, let's see what the target is if this is a wave 4 correction here. So you got a target. You don't have the risk to reward anyway. I'm gonna pass on this one. Your stop would have to go here. You're getting in here. You need 2 to 1 risk to reward to make it worth it. You don't have it really, unless it goes into the upper target zone, which it could. But I like to be conservative and use a lower. So I'm not going to recommend that one either. I get it, not bad. That's the only thing on the clarity of that pullback. I'm afraid wave 4 may not be over. All right, so that is WFRD OEC is our next bad boy. Let's check out that. All right, so this is also moving up. Let's see, yeah, higher here. Okay, not much history. It goes back to 2015, and in stocks, that ain't too much. All right, so let's see what we got. We've got, I think you got a little possible room. I don't like this, okay? Bearish divergence, all right, and a fairly extended. We got 1 pyramid, 2 pyramid, 3 pyramid, 4. You've had the 4 pyramid. So after 4 pyramids, we don't take the long trade anymore. After 4 bullish, all right? Based on statistics on using the pyramids, if you have more than 4, then you're getting into a risky or mature part of a trend, and you could get a sell-off at any time, so we don't recommend it. So no go on this. And that's OEC. Okay, he's got one more, PRTA. PRTA. Let's check that bad boy out. All right, so this one, no, not crazy about it. Okay, don't like that one. All right, no penny stocks today, Al. All right, okay, good job. All right, so, but good job. Now, Al found it's quite a good ones, VRNA, and TELL, so nice job. All right, so let's move on. Stuart, PayPal, PYPL. Gotta love PayPal. All right, let's see what's going on PayPal here. All right, so came down, gotta love this. All right, this is kind of when a major company like PayPal gets sold off for whatever reason, then at some particular point, not only does it reach a price that lures in value investors, but it reaches a technical point where we like to take a look at it, and that's this right now. We gotta love this. Okay, here's the thing on this. All right, let's open up things up here and kind of see. All right, first of all right, great trend trade to the downside. Okay, would have been stopped out. All right, you're out, wonderful profit. Okay, 100% return on that. No kidding. All right, so now what do? All right, we still technically, all right, don't have a bullish pyramid on the weekly. This is getting really close to the zeros line. I love that for an early entry. This has generated a pyramid here. Okay, you got 2 sitting here a little higher that probably could get generated. One will get generated to the upside. These are ones that are forming, but they haven't been confirmed because price activity has not gotten above the points. So we got a bearish one and a bullish one. So if it breaks down, the bearish one will kick in. If it breaks up, you'll have a second bullish one. You got like a blue light special, an early entry here off this pyramid. This is green, this is green. You got pyramids here. So not a bad one for an early trade on the short-term time frames. You got to go with half a trade size because it's still bearish kind of on the weekly chart. So I'm thinking on this, you kind of want to, if you go long here, I would put your stop at the bottom of that pyramid. Okay. So I'm going to put this one down as a buy for a, a trade to the long side. And I'm thinking if it does pop above there and we start to begin a significant move to the upside, then what we can do is draw in some fib retracements right here. And you're talking about it probably going up quite a bit to 154 to 209. Now, what gets things up there? Well, value investors come in, shorts cover, things like that. So people like me looking at the technicals go in. All right, so that's what drives price up. So I think according to the owl on the weekly chart, it looks like the momentum to go short is done. I would say pretty close to done. Doesn't mean it can't make one more low. It could. If so, we'll get stopped out. But I think if you want to try for an early entry, that's a good one. All right, so good job on that. So PayPal is one. All right, see how many long trades there are right now? That's why I don't think the market is quite ready to sell off. All right, so INTU, Intuit. Anybody that uses QuickBooks Pros, TurboTax, there you go. All right, so now we looked at this one before. We still like it. All right, so we got it green on this side. We got green pyramids here. This is a definite buy. Okay, INTU. I think we recommended this last week. And Stuart, I think it's been moving in the direction. It was either last week or the week before. I can't remember. But yeah, you want to buy this. Target is 773 to 1031. You want to put your stop as low as you can. I would probably put it under here. Okay. Or this pyramid forming here. Okay. One of those two spots should be good. Because you'll get a little bit of volatility here possible. So I don't want you to have the stop too close. Again, you could use options. You know, if you ever get to a point where the stops are so far away that your trade size is so minimal, then use an option. And you don't have to get fancy. You can just buy a call option, make it far enough out, because if the target zone's far away, you got to have the expiration date out there. But you can use an option and then just buy whatever you can afford to risk. Not a bad way to do it. All right, XLF. Frank, good to have you here. All right, so glad you can make it. All right, so let's take a look at this bad boy. Not sure if you're doing anything with this, are you? Are you long, short? What are you doing with this? The 60-minute chart definitely has you in a long position. The daily chart, not so much. It's pretty much neutral at this point. Any trade to the short side was stopped out already. So entry here, short here, gone. This is no longer a long position here. So I'm kind of thinking the only trade you could have taken and would have been on the 60-minute chart. But, you know, the problem with that now is that if we draw fibs just using this, we're already in the target zone. So I'm thinking this thing will go a little higher because the PTF is still green here. So it's saying it's going to go into the target zone a little further. But you got to be careful because then we could have a sell-off. Now, the point of inflection is here, so the sell-off probably will come down into the 30s. If this is a 4-3 bearish trend down, then it's going to take off and go below wave 3. So I'm not going to recommend this one, okay? All right, pass. Choose one of the other ones from our list, okay? Those are better. All right, anybody else? Anybody else? Or did I miss anybody? Sometimes I miss a couple because we get people typing stuff in. So let me know if I missed anything and we'll go back and take a look. I think I got them all. This was a good, you guys did good today. So let me just, you want to take a quick look at the futures market? Day trade. So, you know, we have a day trading room and we day trade the best liquidity futures that we can use. And this is gold, all right? Gold in terms of liquidity is probably not quite as good as the MES or the NASDAQ, but it's tradable, all right? Now we trade very short time frames here. So this is a 1-minute trade, but look at this. At 6:50 in the morning, you had a pyramid generated. At the time the pyramid was entered, look at this. This was red. This was red. Everything that needed to be red is red. on all time frames. So this would have been a great short trade. And check this out. All right. You'd still be short here. Okay. Not sure if that took that out. Let's see what the high is on that. So the high on that, no, you'd still be short because this is forming. So your stop would be way up here. So you'd still be short this. That's a lot of money potential for a, what is it, 2-hour trade? Not too shabby, huh? So does the ART system work on day trading timeframes? You betcha. This is a perfect example. Let's take a look at some of the others, and then we'll come back and look at stocks. Let's take a look at the Dow futures. All right, not a bad one either. Okay, but getting a little messy now. So short trades would have been out by now, and I don't think I'd be taking any long trades. I think I'd wait for this thing to bottom a little bit more. Okay, we're seeing bullish divergence on the 1 minute. This is a 1 minute time frame, by the way. This is 15 seconds, and this is 5 minutes. So we're seeing bullish divergence on this move here. So we may get a long trade pretty soon on that. Let's check out the MNQ. All right, MNQ, a little trade profit there, kind of getting messy now. All right, so not a bad trade on the 15-second, but looks like it's going to make a new low here, but we're seeing bullish divergence. So we're almost done with the move down. MES probably will be fairly similar, a little more direct, a little cleaner trade. So here is the entry here, okay, move our stop here, then here, okay, and there you have it, okay. So that's looking pretty good there. And M2K, which is the Russell, clean sweep, okay, beautiful trade, boom, pyramids, 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 okay. So nice trade to the downside. So by connecting the dots, we trade the intraday time frames exactly how we trade position trade. There's no difference, okay? But there's no guessing. It's all structured. And when we calculate the risk to reward, we use the trade size, we use the trade size calculator. So we're not just saying, okay, we're going to do 10 contracts. You know, in these micros with a $100,000 account, you're trading like 50 to 60 contracts. So you're taking pretty good positions. One of the nice things about the micros, by the way, is that if you have a smaller account, it allows you to do it. But even if you have a moderate size account, having a lot of contracts, all right, allows you to scale out in increments a lot more precisely than using a contract like the regular E-mini or the full contract. So keep that in mind. All right, we looked at MC. Oh, nope, we didn't look at MCL. All right, let's take a look at this bad boy. That's kind of messy. The only trade I see here is a short trade based on the PTFs on both these time frames. But this is green, this is red, so it's starting. So no longer a long trade active. So I wait for this to go red, possibly a short trade there, but it's a scalp trade because it's only based on the actual PTF. All right, and then gold is the one we looked at already. So there you have it. Okay, kind of fun looking at those. All right, let's go back to position trading. So let's change our time frames. Now we have the 60 over here. All right, we have the daily chart and the weekly chart. And so now let's take a look. I think Al wanted to take a look at another one called BSM. All right, so let's bring that bad boy up. AJ, I already looked at the spider, but I'll look at it again, okay? We did that in the beginning of the session. All right, so let's take a look here what we got. All right, so a couple things here. We've had our pullback, so I like that. See, I don't like getting in, you know, at these areas after the trend is so extended because you get the pullback. And that's what you got here. You got the pullback, but now the pullback is over, okay? The pyramid on the short trade could have been taken for a nice profit, but you'd be stopped out there, okay? And now as soon as the owl turns green and you got this green, now you're open. You have a pyramid already, so you just had to wait for this down pyramid to get stopped out. Now you can go long, all right? Certainly could do that. Now, here's the problem, all right? You're getting in, because of this pyramid, it delayed getting in. So you're going to have a pretty good size pullback. I would not go in now. Let's wait for the pullback and see what happens. This, notice that the green PTF on the 60-minute time frame has now turned yellow. So it's neutral. So basically, the momentum is starting to come out of the trend. You got to be careful. Now, this is starting to see a little bearish divergence here. I'm not saying it can't keep going higher a little bit, but it becomes more risky of a trade. I would rather at this particular point, let this exhaust itself, let it pull back, and then we'll look at it again, okay? So that's kind of the way I would do it. The other thing here I want to do is on the long-term chart, let's make sure that we've hit the retracement. Okay, we did, so that's good. So a long trade makes sense here. On this one, it looks to me like we've got the makings of an ABC. So I think we're okay on that. Remember that other one we looked at did not have that. So I think okay on this, all right? You've got a big move off the bottom. So probabilities indicate that you'll get that pullback because you normally do statistically. So I'd wait for the pullback and then go in. All right, in terms of where this baby is going, let's draw in some fib extensions. Okay, we're talking 21 to 26 and we're at 16, so not so bad. So maybe if this thing pulls back to maybe 15 or 14 and a half, you can go in. If you don't care if it pulls back and you just want to go in, we'll go in now, but put your stop below this pyramid. Okay, you can do that. And don't be surprised if you get the pullback. So I'm going to put VSM as a buy with caveats, okay? And the caveat is probably better to wait for the pullback. All right, let's take a look at the spider one more time. All right, and this is for AJ. And AJ, you may want to look at the recording too, because we did cover this as well. But basically, what I was saying on the spider is short term, we got more highs coming because this PTF indicator is indicating that this high has a 75% probability of getting broken. So we're still in a bullish market on the lower time frames. On the higher time frames, we're in a long-term bear market. So what you're experiencing right now is a rally inside a long-term bear market. And these rallies can be pretty extensive. You know, we've been in this rally for about 5 or 6 months now. All right. Not unusual, by the way, for a bear market long-term rally, long-term situation. So I think we got about another month or two up to for long trades to do well. And then I think the market's going to roll over. So that's my assessment. I think we're in a complex correction on the weekly chart. And we have a whole service, like I said before, dedicated to forecasting the markets. And it's called the Market Opportunity Report. It's a subscription, which I update every week with a video telling you and looking at charts just like we're doing now on the market. So that might interest you. It's not expensive either. Okay, so let's go keep going on. KSS. All right, let's see what we got here. All right, so I'm not going to go long, unfortunately, right now because of this bad boy here. Looks like this bad boy here is bullish. So what does it mean when you have a 60-minute chart with a green PTF, but you have a daily chart with a red one? A lot of people see that and they go, well, what do I do? Well, it's very easy. It means that short term, like on the 60-minute chart, we're still going to go up a little bit, okay? However, eventually, when we hit the target of what, 24 3/4 or 25, and we're at 23, then this will probably turn yellow, and then this thing will get ready and take a dive down. So in this case, both PTFs could be right. You could get a short-term high and a more intermediate term low. So if you want to trade for a couple days and you got enough risk to reward, which you don't have here, but you could take it to the long trade and get out when the bearishness comes back. So that's how you interpret this. But not crazy about it. Okay, I wouldn't take the long trade. I wouldn't take the short trade. Okay, and again, I think we got one more low, but check this out. We got very bullish divergence. So, you know, a bottom is close. I'd wait for the bottom and then go long. So it's not there yet. All right, so let's see. ECL, let's take a look at that one. Guys are coming up with some good ones. All right, ECL. Let's take a look at this one. And okay, Weekly chart had a nice pullback. We'll check to see if that hit the retracement categories. This is good. Like that dot connected. I like the bounce off here. I like the pyramid there. No longer a short trade, so a lot of dots get connected there. Bullish divergence building here. Pyramid trading point entries. You got to keep your stop pretty low here. We just took out this high, so probably a stop here could be okay. And we've got bullishness here. I think probably a pullback to 161. So you definitely want to keep your stop here. Last thing I want to do is just make sure, beautiful. Okay, so if we open this bad boy up, this is the weekly chart, spread it out a teeny bit. We got a wave 2 down here at 3. Notice here, yeah, I'm thinking possibly a little different on this. So what do we got here? AB, no, you didn't have the ABC really here. Okay, so 3, probably 4 is okay, and 5 will be up here someplace. All right, so not a bad one, okay? Not too shabby. The only alternate wave count would be a 3, 4, 5, and then we're in a bigger move down. That's possible too, because we had the red here and we had bearish divergence here, and we have quite a strong owl here. So that's an alternate wave count resolving itself in an opposite direction. However, if we look at even this chart here on the daily, let's take a look and see what we got cooking here. So I'll drop from here to here. So we're already too close to the retracement zone. Sometimes when you have a situation where you have the scenarios opposite in terms of the Elliott wave count, sometimes they both will resolve at least up to a retracement area. In this case, we're so close to the retracement area, so I'm not sure on that one. Al, I'm not going to recommend this one. Okay, it's got we don't have enough dots quite connected on this one in terms of the Elliott wave count. All right, but thank you for that. All right, so I think that is kind of it. All right. I think this bear market, Bill, is going to be a bear market that affects all indexes, all markets. Okay. So I don't think it's going to be just one particular sector. I think it's going to pretty much hit them all. I think the NASDAQ as well. All right. So that's kind of, but it's got, the NASDAQ's got to go below like 10,080 before we can kind of really definitively confirm that the bear market has the last leg on the bear market has kicked in to take it down to new lows. And on the Dow, we got it. Basically, you got to go below the October lows, okay, on both of them. Siv is asking, what is the PTP based on? It's a secret, okay? It's a secret formula. I can't tell you. All right. Actually, it's based on, takes into account a variety of different factors. But when you look at the outcome, it's 75% accuracy rate. Okay, so there you have it. All right, the owl is momentum, right? And basically the PTF, when it signals more highs, it also is basically saying the momentum was so high in that run that 75% of the time when it's that high, even after a retracement, it's going to return to make more highs. It's really helpful when you're deciding whether you should get out of a trend, take profits, or whatever. All right, so let's see. Yep, good picks today, everybody. Wow. All right, not sector, but secular. There you go. All right, so let me just go over the picks for today. All right, DKNG is one. GBTC, we're still recommending that. RIOT, both those are cryptos, okay? VRNA, TELL, PYPL, INTU, and BSM as well. So those are the ones we're kind of liking. Oh, Dash, we'll take a look at Dash, sure. Here's another one. Let's see. This was also, I think, one we looked at before, and we kind of like that one. And here, okay, I'm glad you looked at this one, because on this one here, you know, we got the green here, we got a pyramid here. Yeah, so Dash, we had this on the recommended list before, but let's just add it on for this week because it's still good. And so that's a good one to remind us of. Excellent. So on this bad boy here, All right, we kind of got a move here. Now, I want you to put your stop. It's kind of a little bit going sideways, but I'm kind of liking it for an early entry. I need you to put your stop below here. So that in terms of a number is going to be, let's see, that's 51.50. Okay, so that's one. If you want to be super conservative, you can put it down here at 45.92, one tick under that pyramid. Now, if you don't want to take the trade right away, then wait until we get a little bit more of a breakout from here. Okay, don't wait here because the risk to reward then might get cut down. But I think if you can take it there, you'll be okay as well. But I'm going to put that on the recommended thing because I think we got a bottom in. So if you just don't put your stop so close, I think you'll be good. All right, excellent. Anything else? All right, so now, you know the recording is kept in the YouTube area. So definitely check us out there. We'll have that. We also put a timeline on. So all the stocks that we cover, there'll be a timeline where if you open up the description part of the actual YouTube presentation, you'll see these stocks that we went over today. And all you have to do is click on them and it will take you right to the stock. So you don't have to watch the whole video. And that makes it really, really super nice to be able to go back. What did he say on this stock? You just click on the stock and it takes you right there. So definitely check that out. Oh, we got one more coming in. HKD. HKD. Let's see what that one is. What is that one? Not familiar. Yeah. Okay. Well, up it goes and down it goes on two price bars. I'm not going to recommend this one, Al. Okay. But it's an interesting one. All right, not crazy about it. Now, doesn't mean that maybe later on it will pop up, but that's pretty flatline there. Okay, so it would have, and let's see how much history there is on that. It's not that much. Okay, so there's not enough to really get a really solid Elliott wave on this. So there you have it. Okay. Oh, TLT, excellent. Now TLT, there's been a lot of talk about TLT. AJ, thank you. Okay. TLT is one I'd like to get into, but I can't, all right, because there's too many red PTFs here and here. So even though we've had a nice run up, no question about it, okay, it has sprung up, this is indicating that this is temporary. This is a basically profit taking, a correction, and it should settle back down and even make a new low. So this was kind of like what we were dealing with silver. Remember silver had the red PTF for so long and we stayed out of it. And then by the time it turned, we got a really good price on it. So you kind of want to wait for that to turn. Now, it looks to me like it could go a little higher because we have a PTF that's green here. So that's probably going a little higher than 109 and we're at 104. So if you wanted to take a little short-term trade, you just wait until this turns green. Can't do it now. Wait for a pyramid and see if you have enough profit opportunity left to take the trade. But otherwise, I can't make a position trade on this right now. Okay. So that's it. But I'd like to, and I will, but things have got to change a little bit. Okay. Because I do think at some point during what I'm predicting is the market sell-off late this year into 2024, TLT might be not a bad deal at that point. Okay, so we'll see. All right, Abed says you're only as good as your last pick. Al. Al's been doing pretty good. He's been doing pretty good picks. All right, AJ, you're very welcome. Thank you for coming. So I really want to thank everybody for making it. Okay. I enjoy doing this. It's fun being here. You guys are just great. Okay. I mean, look at the number of picks we found today. Awesome, right? So it's almost like a free stock picking service, and I love that. Okay. Anything I can give back to anybody, I love to do it. And also, honestly, it gives me a chance to show off my trading tools. Okay. So that's what it's in it for me. Okay. So I'm happy to do that. I'm excited about my trading tools. They're great. I've been using them for, a long, long time, 2 decades, I guess. So, they work and it gives me a chance to show you how they work. So it's great to be here. All right, so we're going to be back next Friday. All right, Stock Analysis Friday is every week on Fridays. So definitely check us out. And again, if you have something that comes up and you can't make it, watch the recording. All right. It does take us, just a note, it does take us a couple hours to get those timelines built into the recordings. So if you go right after the session, you may not see it in there yet. So give us till the afternoon at least to get those timelines set up so you can easily find the stocks we looked at today. All right. Frank says, Sergio says, nice session. Thank you. Good session. You're very welcome. Well, thank you for being here. Frank says, Ben, you are smart because your wife helps you. I'm smart because my wife is smart. Okay. Absolutely. All right. Al says, thanks, Ben and Jean. Sergio, thanks. Oh, my pleasure. Okay. Frank says you were so correct. Okay. There you go. Jeannie and I love doing this. It's great teamwork. She handles the administrational stuff. I handle all the trading stuff, and it just works. And so we've been doing it for a long time, and we're still married. So that's a good sign, right? So there you have it. Oh, one more, JPM. Okay, let's take a look at Morgan here. JPM. All right. See what we got cooking on this. Okay, so we had a big downtrend. Notice a nice profit on that. Let me just open up. Let's just take a look and see where we are here. Little COVID hiccup there. I think JPM, I have to be honest with you. We obviously had a little bit of a move up today, a gap up. All right, so there's some news that came out. My situation on this is I think it is very much like the S&P and the Dow. I think basically we are still moving up on this in this rally. So I think that a lot of basic stocks will do really well. But if you look at the weekly chart, it's very similar to the Dow. All right, we had the high here. We had the first leg down, that October low right here. And now we're moving down. So I think probably a bear market, but we have more upside before that kicks in. Okay. Yeah. Earnings. Right. So, I think the bull market, so to speak, I'll say the rally in the bear market is not over yet. I think it's going to go on for another month or two. And then we'll take a look at it. It's hard to tell when things get into a long-term correction and complex correction, there's a lot of volatility, and you'd be surprised at how long these bullish rallies inside a long-term bear market can last. It sucks everybody in, and then all of a sudden, boom. All right. So this to me looks very similar to the Dow. So yeah, you could take it to the long side. Looks like we're going to have probably more highs. But I'm not exactly, you've already retraced well, but I think it's going to retrace a little bit more. So I think, if you trade it, just use stops. You got a pyramid here and take it up as far as you can take it. AJ says his puts are taking a beating. Well, they may take a beating for another month or so. So be aware of that. But I can tell you one thing. There may be some tremendous opportunities. And if this really bear market / crash does come into effect in 2024, when there's blood on the streets, have a little cash available because you'll be able to pick up some real bargains. So I think there's a lot of opportunities, possibly the short side, but definitely if you want to, and if you're a trader, you could do that. But if you're more of a long-term person, just wait for the bottom, squirrel some cash away, and maybe hedge some of your long positions and things like that, and try to take advantage of that bottom, because if you buy right, then you'll eventually make new highs, because we see that as a major 4 on the weekly, followed by a major 5, and 5 would be bullish going above the 2022 high. So you'll do very well if you buy at the bottom. Okay. So that's it. And if you want to keep abreast of that, again, we have the Market Opportunity Report subscription that you may be interested in, or the Oracle. All right. So I think that's it. All right. Have a good one today. All right. Have a good weekend, and we'll see you back here next Friday. Thanks so much. I'll put a little music on. I guess what I'll do is also I'll put let's take a look and see. Maybe I'll put one of these bad boys up. You can watch gold for a little bit, and then we'll cut the room off in about, 5 minutes or so. All right. So AJ saying, can you scan with the software? Yes. In fact, AJ, this is our scanners up here. One of the nice thing about the scanners is they basically are looking at all our indicators, like the TLM does that. And the turbo scanner looks at all the ART signals. And then we have the Elliott wave scanner doing that. And then we scan on all 3 time frames. All right. So our scanners allow you, notice I don't have 100 charts up. So because of the scanner allow me to basically know what's going on each stock without having the chart up. So it's really helpful in finding them, and that's what we scan for stock opportunities with. All right, so there you have it. So they're really good. All right. Oh, let me mention one more thing. Okay, we also have a trial. You can try our software. I forgot to mention that. I'm a good salesman, aren't I? Forgot to mention the most important thing. We have a trial of our software. It's $399 for 30 days. And if you get NinjaTrader or one of the compatible charting platforms, you can try the scanners, the charting software, and go to it. All right, for 30 days. So that's available for you, and we'll install it for you. That's included in the $399 because we want to make sure you have it set up like we do. So we have a software installer, goes onto your computer in half an hour, 15 minutes to half an hour, has it all set up for you. NinjaTrader comes with free data. So if you, it has end of the day data, so you can test it on that without basically costing anything except for the $399. If you want intraday data, you might have a broker that's compatible with that. You can import it in. But the main thing, as long as you have the end of day data, you'll see how the software works. Okay, so you'll be good there. Jim, you can have as many symbols in there as your computer can handle. When your computer starts getting slow, then back it off, okay? What people tend to do is they'll be scanning for the S&P 500, the NASDAQ 100, and all the stocks. And if they don't have a computer with a really good internet connection, because the bottleneck is the data into the platform. That's usually the bottleneck. And so if you have a slow computer or a slow internet connection, what I recommend is creating the tabs at the top and then closing a tab if you're loading a tab with a lot of symbols. And then when you're done looking at those symbols, close that tab and open up the other one. All right. So that takes a little stress off the computer running all the symbols. And then you can, for example, in our 1 minute time frame, I have this scanner set up so it's scanning 1 minute time frames. Okay. However, when I'm looking at other time frames, like for example, if I'm looking at the NASDAQ 100 or the cryptos, this is looking at the daily time frames. So you can customize the scans to set up the time frame you want. So it's kind of cool. All right. So that's kind of the deal behind that. All right. So anything else? I think we're pretty good there. I think I got all the questions. All right. Okay, good. All right, so I'll sign off here. And we'll close the room in a few minutes here, and I'll just leave this on the this is the gold micro gold contract. It's the June 23 contract on a 1 minute time frame in the center, 15-second on the left, and the 5 minute on the right. So you can kind of see. Gold does not usually move quite as fast as the MES, but the pattern is pretty good here on the MGC. The others were kind of like getting a little range bound. All right, so I'll keep it on here. All right, so that's it. This is probably the trade you'd want to zero in on. And if you were trading this, you'd be just rolling your stops down. So your stop would be right at this pyramid. So it'll be kind of interesting to see if this gets stopped out. In fact, let me put a little line up there so we can watch it for a little while. Okay, and we usually put it a tick. On gold, I'll give you a little hint. When we trade gold, we give it 7 ticks because of the lower liquidity and the stop running that's possible. Okay, the indexes, you don't have to worry about that as much. All right, that's it. So we'll see you next week. Thanks for tuning in. I'll put a little music on and then we'll close the room down. Great session today. Thanks so much. Okay, I just had to come in for 1 minute. Notice the power of the pyramids, okay? So if you stay with them, all right, there's a good chance you'll stay in the trend to the downside. Now we've got a new pyramid here, okay, moving the stop now to here. So now that red line now gets moved here. Okay. So that type of thing. Now, what's interesting is we have a red PTF for you day traders out there. So more lows coming, more lows coming. This just went yellow, okay? So we're getting near a bottom here, but we kind of want to try to stay with it, okay? And do that. But what a great trade, okay? I mean, this was awesome. And the pyramids, look for certain price patterns, but they're also looking at the momentum that goes into forming those price patterns. That's why they do such a good job on a trend, on an impulsive wave of tracking down. A lot of times when you use like a moving average or something, you get stopped out a lot. Now, this is the trend line master drawing in the various trend lines, short-term, intermediate, long-term. That's our software doing that. Kind of cool, right? All right, well, I guess I'll end here, but this is a great example of the software working on a day trading time frame. Again, 1 minute time frame. You got the 15-second and the 5-minute on the right. And you can certainly now, for those of you that ask me if the software works for day trading, you can see this, okay? All right, so we'll see you back here next week. So I'm going to go ahead and close the room. Have a great one, and thank you for being here, and have a great weekend.